Hello, everyone. Welcome to the market opening bell on Thursday, June 19th, 2025. The market is focused on the Middle East situation, with Hong Kong stocks falling on Wednesday. The Hang Seng Index opened 120 points lower, briefly narrowing its decline to 100 points at 23,880 before trending downward again, dropping as much as 348 points to 23,631. It closed down 269 points or 1.1% at 23,710. The Hang Seng China Enterprises Index fell 100 points or 1.2% to 8,594, while the Hang Seng Tech Index dropped 77 points or 1.5% to 5,214. Total market turnover was 181.9 billion Hong Kong dollars. Southbound Connect funds recorded a net inflow of 1.242 billion Hong Kong dollars into Hong Kong stocks, with notable flows including a net purchase of China Construction Bank 209 million Hong Kong dollars and net sales of Tencent Holdings 612 million, PopMart 611 million, Hong Kong Exchanges 422 million, Bank of China 271 million, Xiaomi 261 million, and CNOOC 205 million. Data shows Southbound Connect funds have sold Tencent for 14 consecutive days, totaling 16.042 billion Hong Kong dollars. So CNOOC for 5 consecutive days, totaling 1.856 billion, and bought China Construction Bank for 6 consecutive days, totaling 3.949 billion. Technically, the Hang Seng Index hit a low of 23,631 and closed at 23,710, slightly breaching the 20-day moving average at 23,718, which may not signal immediate concern. Short-term resistance is at 24,100. However, if the 20-day moving average is decisively broken, the index may retreat to fill the upward gap between 23,163 and 23,281 from June 3rd. Mainland Chinese markets closed slightly higher, with the Shanghai Composite Index up 1 point to 3,388 and the Shenzhen Component Index up 24 points or 0.2% to 10,175. Combined turnover for Shanghai and Shenzhen was 1.191 trillion yuan, down 16.1 billion yuan from the previous day. The renminbi central parity rate was set at 7.1761 against the US dollar, down 15 pips from the prior day. At the opening of the 2025 Lujiazui Forum yesterday, People's Bank of China Governor Pan Gongsheng announced 8 major financial opening measures. 1. Establishing a transaction reporting repository for the interbank market. 2. Setting up an international operations center for digital renminbi. 3. Establishing a personal credit institution. 4. Piloting comprehensive offshore trade financial service reforms in Shanghai's Lingang new area. 5. Developing offshore free trade zone bonds. 6. Optimizing and upgrading free trade account functions. 7. Piloting innovative structural monetary policy tools in Shanghai, including blockchain letter of credit refinancing, cross-border trade refinancing, and expanded carbon emission reduction support tools. And 8. Collaborating with the China Securities Regulatory Commission to promote renminbi foreign exchange futures trading. Back to Hong Kong stocks, JD.com officially entered the tourism industry, with its share price opening higher but softening, closing down 1.6%. Meituan fell 3.5% and Trip.com dropped 3.5%. JD.com noted that the booming tourism market has spurred diverse demands, aiming to provide supply chain services to the hotel industry through new channels, optimizing costs and seizing growth opportunities to promote sustainable hotel industry development. JD.com stated that hotels joining the JD Hotel Plus membership program enjoy up to 3 years of zero commission. The company aims to reduce hotel operating costs to one-third of current levels, freeing resources to enhance service quality and guest experience. With over 800 million highest-ranking users nationwide, partnerships with over 30,000 large enterprises and 8 million SMEs, and a strong overlap with four-star and above hotel clientele, JD.com can drive diverse high-potential customer traffic. It also highlighted that high-frequency consumption by its vast user base generates additional travel-related demand. JD.com's food delivery division emphasized building a sustainable business model, moving away from the inward competition of squeezing merchants, riders, and consumers. For merchants, JD.com food delivery maintains low commissions, with rates not exceeding 5% long term. By the end of this quarter, it plans to expand its full-time rider team to 150,000, with over 120,000 full-time riders as of June 17th. JD.com founder Liu Qiangdong stated that the company will launch one innovative business annually, with 6 currently in development, including stablecoin. Haitian flavoring began trading yesterday. Its stock pool trading on Philip closed at 38.2 Hong Kong dollars, up 5.2% or 1.9 Hong Kong dollar from the IPO price. High-end flavoring began trading yesterday. Its grey market trading on Phillip Mart closed at 38.2 Hong Kong dollars, up 5.2% or 1.9 Hong Kong dollars from the IPO price. Excluding fees, 100 share lot yielded a paper profit of 190 Hong Kong dollars. Trump stated that he has not yet decided whether to engage in conflict. The Federal Reserve, as expected, keep interest rates unchanged at 4.25 to 4.5%. The dot plot showed 7 members expect no rate cuts this year. 2 expect 1 cut, 8 expect 2 cuts, and 2 expect 3 cuts. Compared to March projections, 3 more members now expect no cuts, while those expecting 1 or 2 cuts decreased by 2 and 1, respectively. Fed Chair Powell noted at the press conference that tariffs remain the most uncertain factor, predicting they will raise prices and impact economic activity with uncertain scale, duration, and transmission timing. He said the unemployment rate remains low at 4.2%. The labor market is near maximum employment. Job growth has slowed but shows no significant slack. Wage growth is healthy and the economy is stable, allowing the Fed to monitor tariff impacts and labor market data, thus maintaining rates for now. US stocks held steady. The Dow closed down 44 points at 42,171. The S&P 500 fell 1 point to 5,980, and the Nasdaq rose 0.1% to 19,546. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, dropped 59 points or 0.8% to 7,192. Tech stocks had mixed performance. Tesla rebounded 1.8% on Wednesday after a 4% drop due to a week-long production halt at its Texas plant, making it the best performer among the Magnificent Seven. Microsoft, Apple, and Nvidia rose less than 1%. Amazon fell 1%. The U.S. Senate passed a stablecoin bill, boosting crypto-related stocks, with Circle surging 33.8% and Coinbase up 16.3%. Due to a U.S. holiday, initial jobless claims data was released early on Wednesday. For the week ending June 14th, U.S. initial jobless claims fell by 5,000 to 245,000, meeting market expectations but marking the 5th highest level since August 2023. U.S. housing starts in May dropped 9.8% from the prior month to a seasonally adjusted annual rate of 1.256 million units, below the revised 1.392 million in April, and well below market expectations of 1.36 million, the lowest since May 2020, driven by high mortgage rates and elevated inventory. U.S. building permits in May fell 2% to a seasonally adjusted annual rate of 1.393 million, the lowest since June 2020, missing market expectations of 1.43 million as high mortgage rates and tariffs on imported materials continue to suppress demand. Our stock pick today is 361 Degrees, stock code 1361. 361 Degrees focuses on the mass professional sports sector, driven by technological innovation and supported by trendy aesthetics, consistently advancing its strategy of empowering product innovation through technology. In the running category, the Spire Float 2 and Spire CQT2 have undergone upgrades, offering runners enhanced performance and cushioning. The new Cyclone ET fitness and speed training shoe has been launched to boost runner speed. The BioSpeed CPT series, including BioSpeed CQT4 Pro, BioSpeed CQT 3.5 Pro, and BioSpeed CQT Team 2.0, has been upgraded. The Flying Flame 4x4 outdoor running shoe, equipped with a butterfly wing carbon plate and RPU outsole, supports runners in outdoor challenges. In basketball, Spencer Dinwiddie's third signature shoe, DVD3, has been officially launched, featuring race car-inspired design and CQT carbon-critical technology for performance breakthroughs. In the sportswear lifestyle segment, the Ultra Series Spring Collection was released, including high-performance windbreakers, pullovers, and track pants, incorporating zero-constraint technology and windproof warmth to enhance the user experience. Additionally, the new Skin 5.0 and new Movement 5.0 series were launched to upgrade the summer wear experience. These new products provide comprehensive solutions for consumers, from professional competitions to daily training. In terms of channel development, 361 Degrees adheres to a dual online-offline synergy and domestic-international parallel model, injecting strong growth momentum into overall brand sales. As of December 31st, 2024, the group operated 5,750 361 Degrees branch stores, with an average store size of 149 square meters, an increase of 11 square meters compared to December 31st, 2023. By region, approximately 75.9% of stores are located in third tier and below cities in China, while 5.2% and 18.9% are in first tier and second tier cities, respectively. The group encourages distributors and authorized retailers to open larger stores, adopt the latest upgraded store designs, and expand into malls and department stores. Following the successful opening of the first super premium store by the end of 2024, distributors quickly established additional super premium stores in cities such as Huizhou, Chengdu, Shijiazhuang, Nanning, Jinan, Linyi, Yangzhou, and Anyang, aiming to provide the premium offline retail experience. Super premium stores as an emerging channel focus on offering a high-value self-selection model for sports products to capture new market opportunities. Additionally, 361 Degrees opened its first overseas directly operated store in Kuala Lumpur, Malaysia, further advancing its internationalization strategy. In the first quarter of this year, retail sales for 361 Degrees main brand and children's apparel brand recorded approximately 10% to 15% year-on-year growth. The overall retail sales of 361 Degrees e-commerce products saw a 35% to 40% year-on-year increase. Recommended buy price 4.57 Hong Kong dollars, initial target $4.78, next target $5, stop loss $4.4. I do not hold the aforementioned stock.